What's up, everyone? Welcome to my corner of the internet. I'm your host, Ryan Kramer, and this is Crossover Commerce, presented by Ping Pong Payments, the leading global payments provider helping sellers keep more of their hard-earned money. What's up, everyone? Ryan Kramer of Crossover Commerce here. Welcome to episode 55. I want to say it's 55. I believe here we are. 56. Look at that. I had to always double check my own notes. 56 of Crossover Commerce presented by Ping Pong Payments. Ping Pong provides marketplace sellers and entrepreneurs global solutions for controlling their domestic and international funds. An account with us enables companies to significantly reduce their cost when receiving or making international payments all in one platform. It helps increase operational efficiencies, saves time, and allows sellers to manage their business profits in one single source. For more information, go ahead and hit those links below that are in our comments section if you want to learn more about how to open a free ping pong account today and save yourself some money. Thank you again for everyone who's joining us again live on Facebook, YouTube, LinkedIn, and Twitter. Again, 56 episodes we've already brought to you today, or to date, I should say. But if you're listening to this on our podcast, whether it's on Amazon Music, Spotify, Apple, or Google Podcast, thank you for joining it and listening to us there. Go ahead and rate us and download those videos. We're a little bit behind in uploading those, but rest assured you will get all the video content over to our audio format so you can listen to it there. But do me a favor again and follow, like, and share every episode that you come across on social media, and hit that reminder button down there in that button, or that bottom right-hand corner, I should say, for most platforms, to make sure that you're notified when Crossover Commerce episodes go live. I go live about 4 to 5 times a week, which is kind of insane in my mind. We started very small and it wasn't consistent, but now we're going 4 to 5 times a week live. And next week, believe it or not, I'm going live 6 times, twice in one day. So I must be crazy, but I'm doing this for the audience out there to bring you value, content, and insights in the Amazon and e-commerce industry. So with that being said, if you have a question, if you're watching this live, please comment in the sections below on social media. Again, Facebook and LinkedIn, we will see all those comments. Make sure you tell us where you're from. If you're listening from us around the world, tell us where you're listening from. And then also what questions you might have for our guest or myself. We will see all of those, and we'll try to answer as many of those entirely during this show in this 1 hour block that we have. And then also, if this is later when you're listening to this, go ahead and still put us your questions in those comments, and we'll come back and try to answer those as much as possible. That being said, let me get right to our guest today. About Global Wired Advisors, let me dive into the company that our guest works for. Global Wired Advisors is a leading digital investment bank focused on optimizing the business side sale process. Their approach, I'm not a part of Wired Advisors. Their approach combines decades of merger and acquisition experience with online and e-commerce expertise to increase the transactional value of your greatest assets, which is what we will talk about today. Maximizing the value of your company and business sale is achieving their full expression of its full potential, and choosing the right representation to provide this vision for the right buyer means putting your future in focus. And about our guest today, he is the first point of contact for Global Wired Advisors and offers invaluable insight to help sellers and buyers reach their full potential before, and during, and after their sale of their business. He also serves as the head of business development for Global Wired Advisors, leveraging his background in sales and digital marketing to grow their brand. For the past 7 years, he has focused exclusively on high-level consulting for multi-million-dollar omni-channel, digitally native, and Amazon-based private label and omni-channel brands. That's a mouthful. While his partners spent decades working for institutional investment banking, he spent 14 years as a consumer product sales and marketing executive, working for various sizes and companies in companies ranging from $20 million to $500 million. This rich experience allowed him to fully understand and how to operate a multifunctional business and manage complex organizations. Without further ado, let me go ahead and bring on to our show of Global Wired Advisors, Chris Schifferling of Global Wired Advisors. Hey, Chris, what's up?
Hey, how are you, man? Good to see you again.
I know it's been a ride. It's been a week. I can't believe this week's already almost done. It feels like it's been a blur. I've had so much going on. Just like Q1 in general has been a blur. Like February feels like it's almost over. It's Valentine's Day this weekend. It's bananas. Like I don't even know what day it is, but it's kind of how it is now, right?
It's crazy. Yeah, I feel like I just woke up. Well, my family and I were in Disney World last week, so we were in the Magic Kingdom, and so I feel like I just woke up yesterday and was riding the Millennium Falcon, and now a week already passed by since that time. So
I was gonna ask you, since lots of people aren't like vacationing and stuff. I'm curious on your perspective. Like before we dive into it, what was it like? Like what was that decision like for you and the family? Like, hey, is it gonna be safe? Like I know Disney World's like there's a bunch of rides and people and whatnot. Like, tell me about your experience. I'm just curious, like how they're that's a big corporation that is running and trying to like continue to make people safe. So I'm curious what your thoughts were.
Yeah, I mean, I'd say a couple things. One, my kids have actually been back at school since last August, and so because of that, we felt the decision to really just travel in general. We were comfortable. Sure. I had to travel for business a couple times, through the pandemic. And so just already experienced on how to travel through this pandemic and stay safe and as safe as we possibly can. And two, there's no one in our immediate family. It was my wife and my two kids that were at high risk, and so that also weighed in on our decision too. And Disney was just super over the top, man. I mean, protocols were left and right, and they were even a bit militant about the masks. I mean, my wife actually took a break she was drinking a Dasani water and put it down just for, I'd say, no more than maybe 45 seconds. And there was a worker, a cast member that just, beeline from the ye old Christmas shop to our bench and was like, "I need you to put your mask up." We were like,
First off, was it a character? Was it Goofy that was doing that and told her,
"Gosh, I wish,
Gorsh, Mrs., you need to put on your mask"? And that was a really bad Goofy impression, but that would make it more enjoyable. Like, yeah, you're not not approachable or like some person that sounds crazy. You're Goofy. Like that'd be awesome. But yeah, anyway, I can imagine like as some like a business, especially in business world, like you work with lots of business owners. If they work in more like retail or anything like that, everyone wants to get back open but be safe and like accommodating to make people feel like they can spend time there. So I can imagine that Disney does a good job as well. So that's awesome. Like, what was your favorite part of that kind of vacation, if you will?
Gosh, yeah, my wife and I were kind of talking through that while we were traveling back home, and I'd say probably two distinct moments. When we first got there, we went right to Epcot, and we never really. The other thing about the pandemic, you're wearing a mask, so you can't walk fast, right? I mean, you probably could, but you get fairly winded quickly, and it's just not comfortable. And so we walked a lot slower, and we did more things. And so probably for the first time, we really went through Epcot and like actually enjoyed Epcot, everything they had to offer. We went on every ride. It was
Epcot's
awesome.
One of my favorite, most undervalued, I think, properties, because as an adult, I think like you look at Epcot and you're like, yep, I need to travel the world again. Like I just need to go to places again. Like this that would do it for me for sure. But just exactly like the different countries. Yeah, the different countries. I know they're bringing a lot more rides to it, which is pretty more adult focused, but I think that's pretty cool. That's awesome.
Yeah.
And then, so you guys did that. You're in North Carolina. So did you guys drive or did you fly?
We flew. Yeah, we flew down there. It's just, we've done the driving to Disney thing several times and it's not great, with two young kids, and it's just not great. So I will tell you, I don't know how much of a Star Wars fan you are.
Big fan.
The other memorable time was basically Hollywood Studios. It was tremendous. My son is a huge Star Wars nerd, and our whole family tends to be more Star Wars nerds. And so we got to get on the Rise of the Resistance. We went on Star Tours and saw so apparently they have 26 or 27 sequences on every one of those Star Tours rides. So when you get in and you feel like you're seeing something new for the first time, it's probably true, because you're seeing another sequence you haven't seen in the past. It's insane. And then of course the Millennium Falcon, we got to ride that we got to ride that a couple times, and my son and I loved it because we were both the pilots, and and so it was a good
Gotcha.
time. Yeah.
You
So
kicked out Chewie and Han Solo, so that's good.
we did, man. And it's funny, my my son, because you at one point in the ride you actually have to pull back on the thruster,
Okay.
just like Chewie does or whatever, or Han Solo. But you know how he says punch it, Chewie?
Punch
My
it, Chewie.
son,
Yeah.
yeah, when it was time for me to do that, he turned to me and told me to punch it, Chewie. So it was we
You're
were
like, I
laughing
will
really
never
hard.
forget that in my life. That's awesome. Well, I'm glad you guys had a good time. That's fantastic.
Yeah,
So was
thank
it
you.
hard? Was it easy to get away from work, or were you constantly like your industry? I can imagine you probably have to be pretty dialed in. So I know I gave you a quick like rundown of your bio and background of what you guys do. So like maybe walk me through, for people who don't know, like Global Wired Advisors, or like what you do in your background. Can you walk us through like what you do specifically, and then how Global Wired Advisors kind of operates?
Yeah, absolutely. To answer your first question, no, we're a 4-partner led firm, and the 4 partners are very respectful of one another when it comes to travel. If we're
Okay.
away with our families, they're not calling me, texting me.
That's good.
I might check in a couple times, but that's also the beauty of owning your own business too, right? And especially picking the people you decide to work with, is very important. So yeah, you're looking for, then to answer your other questions, you're looking for effectively just the story of Global Wired. Is that right?
Yeah, that's it.
Okay, perfect. Well, yeah, so we started about, it was roughly about just over 3 years ago. It was, I was working, as you mentioned in my bio, I was working for various um, baby product companies. I was in the baby and toy space. And so as a sales and marketing executive, and as you mentioned too, all different types of shapes and sizes, running from 22 million all the way up to $500 million. So I spent, that was lion's share of my career. I was, going to line reviews at Target. I was going to Walmart. I was going to Bed Bath and Beyond and Kohl's and Nordstrom and Pottery Barn and all the major big box retailers, and pitching them on the products that we were selling. At the same time, I also got very acquainted with Amazon Vendor Central, because that was one of the first accounts that I actually managed at my first job. Amazon at the time, and I can't remember exactly which year it was, but they were going to our trade shows and making a really big push for baby products. They wanted that parent consumer. So I had a lot of good experience when it came to Vendor Central. I sold to all the larger e-commerce players. I sold to the Target.coms and et cetera. But I realized that I needed to pivot my career back in probably 2015.
Okay.
It was about 14, 15. I actually, at the time, I was working for an international baby products company. It was a premium stroller and car seat business called Jeanne. And I was tasked with bringing, basically establishing Jeanne North America as an executive general manager. And so what I struggled with, though, was in between collections, I had about $500,000 of inventory in a warehouse that needed to move. And so
that's not stressful or anything, right? Right. For any Amazon seller, it's like, yeah, I just have $500,000 in assets just sitting there in a warehouse waiting to be sold.
Yeah.
That's not stressful at all.
No. And so, the retailer base at the time wasn't taking it. It really wasn't, it was going to cost a lot of money to really push it through our website. So I just decided to go ahead, buckle down, and really learn Amazon. So instead, at the time, which has been kind of the traditional, where resellers were very big, right?
Mm-hmm.
Traditionally, you would sell to, and I actually sold to e-tails at the time. I was selling through e-tails, and they were purchasing our inventory and really managing the Amazon business. And there were a few others that were selling on Amazon. I said, I got to learn this thing myself. So kind of during that gold rush, I just buckled down. And I mean, there's no course at Kellogg or Northwestern or Harvard that's offering, hey, here's how you run an Amazon business. It's all School of Hard Knocks, and you got to really just do your own digging in effectively. And so yeah, man, I learned, fast forward, I learned it. I really pivoted my career at that time to become just a pure digital marketer. I learned more than just Amazon. I had been working at that point with our digital marketing firm for a few years when it came to Facebook ad strategy, when it comes to Google ads, and just the SEO strategy as it was ever evolving from, the years of early 2000s all the way up to until today and continuing to evolve. So I already had a good framework. I really dug in, learned how to be a true digital marketer. And after that stint with Jean A, I started my own consulting business where I really helped enterprise level clients formulate good digital strategy. And it was during that time that I actually met my three partners. So they already started another firm called Providium Advisors. It was a lower middle market investment bank that was focused on small to medium sized businesses that are more traditional in nature, right? So, they were, one of their trades was a $40 million manufacturer down in South Carolina, right? This as an example. And so when I came along, we met and we hit it off right away. And really Global was birthed through a conversation over coffee. And we said to kind of collectively, there's a real void in this space for a true investment bank or an investment banking process to really help sellers as these businesses are now growing and thriving, really bridge the gap from that, call it traditional way of brokering, to selling a business in a very optimized form. And so Global Wired Advisors was started. It was formed back, like I said, about 3 years ago. And we're a 4-partner led firm continuing to build out our support staff. We just hired an analyst this week, two associates and a vice president, and we're about to hire another vice president, potentially a managing director. So we're in, our infrastructure is what you would find at a middle market investment bank. We're not 1099 guys on a bunch of different desks across the country. Right. We're internal, we're intrinsic focused, we're resourced intrinsically. And so it makes for when a seller sells through Global, it's not that they're selling through Chris Shipferling, the broker. They're selling through a investment bank that's utilizing every piece of resource it can possibly utilize to optimize that sale process. Yeah.
So there's a distinction I've saw on your website when I'm hearing you keep mentioning investment bank versus brokerage. Mm-hmm. Now, I want to make the distinction between the two because I think that's where you guys try to put your hat on, is that difference between one versus like a traditional brokerage. What would you consider that? What's the distinguishing factor between that and like a broker who has been around there maybe 15 years or longer than you guys? What is that difference?
Yeah, it's not time. It is time. It is experience, but it's different type of experience. So let's start with career history, right? To be someone, a true traditional investment bank offers lots of different products. A brokerage just brokers and sells your business in a passive way, right? So when it comes to an investment bank, now we're not FINRA broker dealer yet. That's a whole other conversation we can have. That's when you're actually underwriting debt and you're trading securities and you're effectively offering either equity or debt offerings under 20% of the enterprise value of the company. We're not there yet. We're headed towards that path. However, the types of products we offer, one, sell side engagements, which is, Ryan has an incredible e-commerce business and it's 2 to 3, 4 million plus in EBITDA. And he wants to have an optimized transaction. And we understand what your goals look like. So we're really kind of layering in the goals and the type of fit for, and I'll get into all that later, but that's one. So that's sell side engagement. We actually do buy side engagements as well. Now, what that means is, and we actually have 2 of them that we're currently working on. Private equity firm, one middle market and one very large private equity firm has reached out to us and said, hey, we want to hire you guys to help us target specific acquisitions for one of our portfolio companies. We're creating a roll-up strategy around e-com. We need your help with that. So that's another, call it traditional investment banking product that's offered. Another one too would be raises, so capital raises. And again, as long as you're raising and not doing it for a publicly traded company, then it goes back to what I said. You don't have to be FINRA broker dealer for that. That is still something we do, but that is fairly far and few between. We did a $22 million raise about December of 2019 it closed. So we can do them. But at the same time, it's not something that we're doing and actively marketing, and we're not actively marketing buy side engagements. Those come to us and are solicited to us. Sell side engagements is really where we're focused. So it's the products that are being offered that really is what distinguishes an investment bank versus a brokerage. And also it's career history. I mean, it is extremely difficult to work for bulge bracket investment banks. And it's not only difficult to get a job there, but it's extremely difficult to work in that environment and thrive in that environment. You work on extremely complex financial transactions that are very, 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 I mean, large, sure, but extremely complex, right? So they're hiring from all of the Ivy Leagues effectively. And so the three partners of mine all came from those large bulge bracket investment banks. They came from Deutsche Bank and Bank of America and Wells Security. So our firm really is very unique because we're offering that large financial engineering background. And then we're also coupling that with digital expertise. So we're able to really deploy just very strong resources into someone's business when we are prepping them to market to sell their company. I'd say the other big distinguishing factor is process. It is absolutely process, 120%. And it's
walk me through like what does it look like to work with you guys? Like I'm an e-commerce seller, or I have a, just for simple purposes, most of the people watching the show have their own like brand or business. If I'm looking to you guys at a certain point, I want to exit my business, I'm coming to you guys, correct?
I hope so. And if you do and you come to us, we're going to spend a lot of time together before I'm putting any type of engagement letter in front of you. I got to understand your business from A to Z, no pun intended. But I got to understand your business. I got to understand all the functions of the company. I've got to dive into your numbers. I have to digest your financials. I need to spend a lot of time making sure that you know your business, that you understand your business, and you also have a plan for your company. Because your view about your business, Ryan, is very important when it comes to the buying community. They want to know what you believe about your business and if you're confident about your business. So what we're going to do is we're going to take it in its current form. We're going to take every bit of your company and all functions once we're engaged. So at that point, we spend a lot of time together. Engagement letter goes out. Now we are engaged. You are a client. We're going to spend 3 weeks diving deep with our associates and our analysts under now really kind of taking all of the pieces and painting a Picasso to the buying community, because we're going to try and put you in a position of strength, not a position of weakness when it comes to selling your company. The other thing we're going to do is we're going to create a market. So Ryan has a games business, and you've been to Toy Fair, you've got a really nice company. Majority of your concentration for revenue is probably e-com, maybe not, maybe it's half and half. And you're really looking for an optimized exit. Well, since you're games, one of the things our investment bank does is we go to trade shows and we get to know strategics. We have meetings with CEOs of very large and medium-sized toy companies. We've had several of them with just game-specific companies, just to get to know them and understand what their acquisition criteria looks like, and let them know we're going to get deal flow in this space, and we would like to put that deal flow in front of you, especially when we truly understand what your criteria looks like. So we're going to go create a market. That's a big difference, right? Because instead of just sending out to a subscriber list and claiming I've got all these buyers, that's a real just used car salesman tactic, in my opinion. And I'm not trying to disparage, but I'm trying to create contrast. I'm trying to create distinction, as you mentioned, right?
Right.
Because
exactly.
one is a tactic of buyers, and it's more tactical in nature and passive. And our process is much more aggressive in the sense of we go create the market for your business. We go find specific buyers that would love to look at your company and would love to purchase your company.
So more of what I'm hearing is you're trying to know what they want from you and like what they want out of it and what's the best marketplace to go after. Basically, like if, hey, I'm in the toy company, I'm going to go after, and this is why I'm valuable. And you go after those potential roll-up companies or aggregators potentially, or another sort of company that might be interested because you're strong in this category. That's what it sounds like, not the valuation of a brand, almost like this is a holistic approach and more category fit. Is that a fair assumption?
It is. It's more strategic. That's the way you got to see it. It's a very strategic way of putting your particular business through a process. And I would say too, great example for your listeners, and great example I think for you too. There's a business that we have to market. You'll never know it, by the way. We don't list it on our website. We don't have it. We don't have it in an email blast. There's an offer that, or a business that we just recently got 11 offers on that business. You know, you got to understand, it's not underpriced. There is no price on our companies that we put out to market. So it's not like they bid 11 bids because, oh my gosh, this is Facebook Marketplace, right? This is completely, again, that's also part of the difference in the process. And so we put it out to mainly strategics and private equity, actually only strategics and private equity. We had over 413 private equity firms that were wanting to look at acquisitions in the space, and of course the strategics. We had 11 offers on that company, and just to really hit on a point about aggregators and roll up, there was only one aggregator bid. 10 from middle market to not necessarily enterprise or touching close to institutional private equity firms that want to get in this particular category. It's in baby products, and so that's a world of difference than what
you're talking about companies that are different than just the traditional, like, when you say aggregators, everyone knows Thrasio, you know, Heyday, you know, the traditional like Elevate brands, so on and so forth, you know, that group. But then you're talking about investment portfolios who are like, maybe I'm going to throw out a name, Procter & Gamble, who wants to buy a business because they're doing well in this business because it fits their category, or they want to diversify in this. Kind of almost similar to.
Similar, and that would be classified as a corporate strategic. Corporate strategics, like a P&G, they'll pay more. They just don't do as many acquisitions. Private equity is in the business because they've got LPs, right? So these limited partners, LPs are pouring cash in, and then you have the GP who is basically running that fund, and he's been tasked to go find as many deals within whatever strategy that fund is looking to deploy. So sometimes what they do is they'll look for like what they call a platform or a cornerstone deal. What they mean by that is they're looking for something a bit more sizable and chunkier with more market share within a specific industry. So like toy and games, they might look at you and go, hey, this is $10 million in EBITDA. This is a strong, growing, thriving company. Its majority focus is in concentration is on e-commerce. This is perfect for us. We want to get in this space. This will become our cornerstone deal. And then from there, they're going to start going out and getting acquisitions to roll up into that particular company potentially. So that's one kind of example.
Yeah. Awesome. And then the other thing I was hearing, you guys do more than just, so in e-commerce space. So a lot of people are brands themselves, but you guys, it sounds like it's more than just brands or sellers on Amazon, businesses that you're brokering. Essentially, it's more, it could be SaaS. It can also be, I think I saw the other one was, agencies. Okay. So you're talking about like an agency itself that either sells to another agency or sells to another, you're talking about like another entity like this.
Yeah, effectively a digital marketing agency, an Amazon consulting agency that's grown up and is now a real business. Let's just call a spade a spade. Back in 2016, it was just someone out of his, spare bedroom, and now they've got a real team. They got real infrastructure. They have real EBITDA. They've got a real growth trajectory. And frankly speaking, you've got now a lot of potential demand for agencies like that because so much new capital is being poured into the e-commerce space. So, and I mean, it's far and few between. We don't focus very heavily. Digital agencies tend to be a byproduct of just the space that we play in consumer products. SaaS is also far and few between. It's not necessarily something we're actively going after and pursuing. We found that a lot of SaaS business owners are more looking at that kind of Silicon Valley VC, I want to IPO one day. And so our focus really is consumer products. That's our focus. And so to answer your question, I mean, as far as active deals or deals that are going to market, it's a whole buffet. I mean, we have one deal right now. It's, close to a $10 million in EBITDA. These guys are traditional distribution. Like, they have 4 or 5 distributors across the country. They sell in Bass Pro Shop. They sell in Cabela's. I mean, they're a fairly kind of traditionally minded sales channel. They've got some Amazon, and they've got their website by Halo Effect is just doing really well, but they do zero marketing for it. So, and then I've got, a deal that just closed 2 days ago that was 98% Amazon, but it was a sizable deal. So yeah, our buffet of active deals looks, comes in all shapes and sizes.
I was gonna say, yeah, it sounds like a smorgasbord, if to throw out another word for buffet of like what you're working with. So that's fascinating. I think what a lot of people are understanding, and again, if you're listening or watching this on social media, everyone go ahead and say hi. Hi, Lisa, again, friend of the show. She's always like tuning in and listening and getting different tips and tricks. So awesome, and looking forward to your thoughts on it, Lisa. But if you have questions for Chris or I, definitely comment on the comments below, whether you're on LinkedIn, YouTube, or Facebook. I know we're on Twitter too, but I don't think you can reply back on Twitter. That'd be weird. I don't want like random tweets coming in, hitting me hard. Don't at me on Twitter. So just watch us. But anyways, right. I get some of the things that are coming to mind, and again, this is all stream of consciousness. So
by all means, I love it.
For what Amazon sellers are looking for, and I know like this is such a hot topic because there's a big distinction between the marketplaces. What I'm seeing, they're either entering the market and like, how do I become successful so I can eventually get to this place? Because they hear about the Thracios, the role of the aggregator companies. It's a really hot place to be in right now, because 2020 I think really shone a light on that need.
Yeah.
The second place is, I'm an Amazon seller and I'm like, I need to know the minimum qualifications I need to hit, or almost like a checklist, if you will. Like, hey, I've been in business this long. I'm doing this much monthly revenue. I'm in this many marketplaces. I have this much, this many products or listings or whatever. Walk me through what is a minimum qualified business that you guys are even looking at look like? Yeah.
Well, for what we look at versus the advice that I would give somebody, just in terms of how you framed everything there, kind of a minimum qualification. So let me separate those two into two different answers.
Yeah, let's do it.
Minimum qualifications across the board. Just build a great business. Now, what does that mean? Right? That's a 90,000 foot dart. Building a great business means that you're methodical about the category you're getting into. You're looking for white space. You're looking to build a brand, which, by the way, is a whole other topic we could talk about. What does a brand look like, right?
Yeah.
But you're actually building out a brand. You're choosing products that are not commoditized. They are specialized, right? They've got some flair of uniqueness. Now, we can use terms like IP. We can use terms like, trademark, patent, et cetera. But let's keep it a bit more artistic in that sense, in the sense of, try and find ways to build a product that is going to resonate very well within a specific vertical with a large consumer base, period. And when you do that, you build either a product or a set of products that help also build out a product roadmap, because that's what a good brand does. A good brand has a plan to not just have one trick pony, 3 trick ponies. A good brand is vertically focused. It isn't in 7 different verticals. That's kind of the first wave gold rush of FBA businesses. They were selling garlic presses and they were selling, kitty litter.
The number one example in Amazon, a garlic press.
It's always.
Why is it a garlic press? Chris, why is it a garlic press? I don't know.
It's a great question.
I wish it was something else, like sexier, like, God, what? It could be anything. Like garlic press, like it.
I don't know.
The most unsexy. If I went to my kitchen right now, I can find 10 more products that are way more sexier to talk about than garlic press. One being a can opener, like even a can opener. Can opener is a multifunctional thing. A toaster. Well, I know that's an appliance, but a toaster is better than a garlic. Anyways, whatever.
Yeah.
But off topic. I hate how that's the number one thing I always come across. We need to start establishing a new kitchen gadget. It needs to be something cool.
I agree.
And you and I will know we started it here. So
we did. That's right. On this particular podcast, we started. Crossover Commerce podcast. We started a better way of doing things. So yeah, it's just the idea, and it's the lens of creating something great. That's really what it is, right?
Right.
And so it's doing the research to understand which vertical to get into. It's doing the research to try and identify the right product set or the type of products that you want to offer to a large consumer base. It's about doing the right things when it comes to brand is how the customer perceives you. And so making sure you do the right things across the board from a holistic perspective, that's kind of on the call it just the shelf, right? But then behind the scenes, you're making sure you're building in enough gross margin to handle Amazon and also to handle the cost of driving sales through your own website too, right? It's not, none of this is cheap. And so you have to have enough gross margin built into your business. But, again, this goes back to, this is why in business school, they teach you how to write a business plan, right? Business planning is very, very important to growing a great business. Now you can scrap that and throw it out because, you'll hear from lots of founders, us included. You have a hypothesis or you have a theoretical idea of what you're going to do at first, and then you adapt. You just continue to evolve and adapt. But you got to go into it with a really solid plan. Know what your numbers look like. Start looking at a forecast. And identifying what skill sets do you bring to the table and where do you need to start outsourcing some skill sets. So if you do that, you will build a great business and it will grow. It will grow in top line revenue. It will thrive in bottom line EBITDA. And you will have minimum qualifications, absolutely, to be an extremely attractive acquisition target. And so
go ahead. Keep going.
You keep going. You go, man.
I was gonna say, you mentioned assets a lot, and that's kind of the whole component of this. As a brand owner, I may not know the assets I do actually quantify, or like I have with me. In my mind, an asset is, and I kind of listed it in our show notes of, an asset is me, either the seller, because I know the business, I know the processes, I've built out the SOPs, all this other stuff. So me as a business owner, it's my product or inventory, it's my listings, and then my brand that I've built. Those are the four major ones I think of when I think assets. What am I missing there?
Nothing really. I mean, look,
Okay.
an asset is what you've built that consumers really like to purchase, man. And consumer products, that's it.
Gotcha.
That's what your asset is. So you broke down the larger term asset within consumer products. Because a lot of folks will kind of look at it more traditionally. Well, assets are my computers and what I've got in machinery,
tangible goods. Yeah, exactly.
Yeah, and it's like no. You broke it down. I think that's a good way of breaking it down.
So let's go one by one. How do we maximize each of those? Let's start with product. Yeah, or let's start at the top. Me. How do I maximize me?
Well, again,
I'm only one person.
Again, it goes back to a business plan. Honestly, you got to look at it and go, what am I bringing to the table? What am I not bringing to the table? And how do I build out a company and a team effectively to help me accomplish this business plan? And oh, by the way, does this business need me to thrive? And if the answer is yes, then you have to, in the beginning, start thinking through how I'm going to get myself out of this business. If I go away tomorrow, because that's the point of selling, how am I going to transfer over this business to someone else? I mean, SOPs are wildly important. I don't know if you've ever read The E-Myth Revisited by Michael Gerber. It's a fantastic book. It was one of the first business books I read a long time ago. It actually gives Ray Kroc and the McDonald's. It's more of like a franchising type book, but the idea is that McDonald's, the reason why they could replicate so quickly and so fast is because they effectively built a book that they could hand to a new owner and literally follow it step by step, page by page. I'm going to need to make fries. I do this, I take it out of this, put it in this meat, put it in this cooker, et cetera, right? It lines everything up. And so, yes, I mean, being organized, gosh, of course it's wildly beneficial. Because organization to a buyer or buyers or a fund just shows that this business owner in particular has built something great.
You said McDonald's. All I think about is the movie The Founder with Michael Keaton, and that
Yeah,
is such an underrated movie that I love.
great.
Fantastic in terms
Yeah,
of like franchise. You're talking about franchising versus like a business model, and what's more profitable? It's the franchise business of McDonald's and the land property. It's almost like the real estate business versus the actual entity itself. So I thought that was super fascinating to learn about that too through that.
oh yeah, absolutely. Yeah. McDonald's. I mean, if we really could wax poetic, McDonald's is a real estate business. But the reality, the principle from this book is write everything down so you can hand it over to somebody else. Right. Make sure you've got all your processes in place. Processes are very important to a thriving business. Very, very important. So yeah, I mean, minimum qualifications. I would say you've built a great business, and when you've built through the lens of building something great, you're going to have all the minimum qualifications, right? You're going to be vertically focused. You're going to have the financials reflect a very attractive company. You're going to have you're going to have growing top line revenue. You're going to have a real trajectory. You're going to have a 3-year product roadmap to show where this business is going next. You're going to have strong branding. I could keep going, but I'll just keep repeating myself. So
that's okay. And for everyone watching, we put the link to this book on Amazon. Again, Amazon and books. Like how poetic is this? Amazon and books listing came up first when I searched for it. So E-Myth Revisited book. Yeah. Put the listing in our comments. If you're watching on LinkedIn, you can head over to our other social pages or in the show notes, and then make sure you check that out there. So that's a really cool book. I'll make sure that link stays with this one.
I would say this too. I'll throw another book recommendation. It's something I just read and actually almost done. But How to Measure Your Life by Clay Christensen. Anybody wanting to grow a business, just starting from, kind of that day one mentality of business planning and kind of thinking through. It's a really good book because it not only just talks about, he's a very, very intelligent professor from Harvard, but it not only just talks about, here are all the things you should think through from a business perspective with lots of good examples, but then also balancing that home life too, talking about how important that is as entrepreneurs, and as business owners. It's very important to have a balance of the two. So
yeah, I'll put that in the show notes as well. So awesome. That is the, person, me, the brand, how I can basically maximize myself. Maximizing product inventory, what that looks like in the mind of you as a business or an investment banker or broker. How do I maximize and make myself look the greatest in terms of my inventory?
It's let's get real kind of in the weeds. It's inventory management. How well has inventory been managed? Do you have any dead inventory? Do you have any, call it past 90 days type of columns in your inventory spreadsheet or in your ERP? How many turns per year is that's all part of inventory management. How many turns per year are you achieving? How well are you managing cash flow to make sure that inventory is healthy? And then, that's a pretty kind of straightforward asset. You need the inventory in order to sell anything. So it's obviously part of the deal. Now, for some of your listeners, and they might be asking, well, how do you figure inventory? That's a big conversation. How do you figure inventory as part of the overall valuation and call it the enterprise value of the company? Yeah. In almost all of our trades, since they tend to be a bit larger, it's always viewed as it's a working capital analysis effectively. And so we do that internally. We do that with the buyers. We, trade notes, and of course we're fighting for our client, but we do a working capital analysis to see how much of the inventory that currently sits in a quote warehouse or is on the water or is getting produced is needed to run the business in the current run rate that it's showing. Outside of that is overage. Any overage is typically just purchased at cost. That's how almost all of our trades that we've done, how they have been analyzed in terms of inventory.
So in terms, is this true when you have like so much inventory that helps the multiple of how much your business is, essentially what it's worth? Like depending on how does that work?
It's a weird tactic. to kind of put inventory out there to juice an evaluation. Inventory is it's the fabric, it's DNA of the company, right? To extract it and put it to the side and say, oh, but yeah, here's inventory, here's goodwill, or here's the asset purchase price, and then here's the inventory that goes with it. For us in Main Street, when you have smaller deals, that's just kind of a tactic, a call it legacy tactic, how people have traditionally sold those businesses. We don't do any of that in our firm. We just look at it differently. It goes back to what I just said. Working capital analysis, any overage of that working capital analysis that's agreed upon with the buyer, the seller, us, is then sold at cost. And so we're not trying to sit there and juice a valuation with there's a specific brokerage that does that, and I think it's a really bad tactic. I think it's very bad, actually.
And just to clarify, when you mean juice, it meaning like, hey, there's inventory out there that is either not accounted for. Is that what you mean by that? Like, maybe be more specific.
I've actually seen a brokerage put inventory in the cash flow number to juice. So what they were trying to state to a potential buyer is, hey, cash flow was 200, inventory was 200, but all together is 400. Give me a multiple of that. You're basically trying to make a buyer pay for a multiple of inventory. It's stupid. It really is just stupid. I don't know how else to explain it.
Well, yeah,
I can't even give you an intelligent
you
answer.
broke up in the first part, Chris. So just maybe like really quick, simple. Like it cut out just as you were starting to explain it. So really quickly. Yeah, it's inventory. Just really simply, if you could again one more time. I'm sorry.
Yeah, no,
because I think this is important to the
and I've seen it. Not a lot of folks do this. Okay, so this isn't a blanket industry thing. I've seen it happen once, and what they effectively did was, and I've seen it when I say once, I saw it from one particular brokerage. They took the cash flow of the business and they took the inventory cost and they totaled that number. And they applied a multiple to the total, which is terrible, absolutely terrible. So it's just again, I can't even intelligently walk anyone through that because it genuinely is just it's just so stupid.
Well, so, and maybe I'm seeing the oversight in this. The difference is basically you're double dipping on the same thing. Is that essentially the easiest way to say it?
The easiest way is you're trying to apply a multiple to inventory cost, and that's just not real. That's not a real thing.
So why is that? Why is that a distinction that is not true? If like I buy it, is that part of my brand, or is my product essentially my costs that I owe? It's my debt, or it's my something I technically own, right?
Yeah, you own it as the company owns it, right? And it's good. It's an asset that's used to produce cash flow, but cash flow, EBITDA. What all of it produces is what you should be paying for. And then inventory is cost, or like I said earlier, it's utilized inside of a working capital analysis to see how much of the inventory that is currently sitting within the business is actually needed to run the company on just a current run rate, the current growth trajectory. That's why a working capital analysis is very important. And then overage is always, for us, is always just applied at cost, whatever the cost.
So you're breaking out even further. Like they're distinguishing, you're taking a step further and distinguishing in more categories. So it's easier to break down and see like how a business is actually functioning, essentially.
Yeah.
Correct. Okay.
Yeah. And like there's another brokerage that I think does a really good job of showing, hey, here's what we believe is the cost of the business. So it's $300,000 in cash flow. We believe that you should pay $900,000 for the business plus inventory, and they do that with every deal they put out. And I think that's a very transparent, good way of showing any buyer that's looking to buy any of their particular deals or deal flow. I think it's a good, transparent way of doing it. My argument, or not argument, but my counterpoint to that though is, when you start to get into larger sized trades and larger sized businesses, that has never been a thing. You don't ever just go out to a private equity firm and let them know the cost of this business is $3 million plus $400,000 in inventory. That's not a real thing in that financial market, in those financial markets in that world. So the way you do it is, here's the information you need as a big boy to do your own valuation. I'm going to provide you with the story. I'm going to provide you with every bit of information you need. You're going to see a very organized, wonderful company that you should purchase. I'm going to sell you on why it makes sense. So it's a lot of technical sales. And then you're going to come back to me and tell me what you think it's worth, the entire business. And then we're going to talk about inventory in a working capital perspective. So anyway.
No, that makes sense. And that's why it's distinction. I want to make sure we're 100% clear on that. So we maximize inventory, and that makes sense why you have to do that. We go back to brand. How are you maximizing someone's brand? If they're working for you, what's the best way to do that?
Highly qualitative. The brand, the measurement of a brand is all of the financial and effectively digital metrics, right? It's going to be much more qualitative and not quantitative. And so, how do you apply a number to brand, right? Well, you don't. It just makes you a much more attractive acquisition. When someone can clearly, again, we just had a business close 2 days ago. So these guys had a brand, a real brand. And the result of that was highly intelligent people who were looking at this business and distinguishing whether it's a good acquisition target for them. All of them identified this is a really great brand. And the result of that was a really good trade, a really strong valuation for the business, because it was much more attractive than, say, someone who doesn't necessarily have brand, not vertically focused, and effectively just a commodity that's producing cash flow.
Okay, that makes sense. Yeah, very simple and straightforward. And I know we're coming up on the top of the hour, and I'm assuming I only have you until then. I'm going to do a rapid fire, a couple questions for you.
Love it. Bring it, man.
Yeah. I've been writing this as I go, so I have a couple. Most exciting opportunities for you as a company. What are those?
Oh, top quartile brands that are highly organized, and the business owners, they know their business very, very well, and they know what the future of the company looks like. They've got it down pat. Always, every day, I'll take that. Okay.
Best categories to be in as an Amazon seller, to sell their business.
Oh my gosh. Home improvement's great. Pet's great. Baby products is good just because it's niche and it's kind of like taxes. Everyone's always having babies. Birth rate has slid. But,
right.
Yeah, I'd probably put those as the top three. A lot of like vitamins are good. Anything that's just really crowded, it's really saturated. But the toy, that's another good one. Like just getting really solid valuations.
Best marketplace to be in besides whether it's international on Amazon or off of Amazon?
Best marketplace. Oh my gosh. Definitely not Sears or Kmart.
Or Macy's right now.
I know. Or Overstock. A Walmart, obviously. I mean, that sounds like, oh, well, of course you give that answer, but they're doing a lot of things to make it a much more seller friendly platform. I think you're going to see them come on the scene pretty hot and heavy in 21, 22 and give Amazon a true competition. Yep.
I'm also telling people Target's coming on strong, and Target as a marketplace will be coming quite quickly and heavily. I think that will open up for a lot of US sellers. International marketplaces, any of those that, or if you're on .com or Amazon.com, makes it look good if you're selling in this Amazon marketplace.
I think, naturally Canada is easy. Mexico is always easy, but UK, Germany, those tend to be the top two that are outside of just US marketplace. Japan is coming on strong. Australia is coming on strong. You're only going to get so much market share though out of those two because it's only so big. So
right, those are growth opportunities. I continue to tell our listeners. Number two and 2A, it's UK and Germany. They always flip flop. They do about 70% of the UK or the European business on Amazon. Yeah. Number 3 is always surprising. Is Japan. Japan is the number 3 marketplace in Amazon right now.
And Japan, if you have something that they want, it will trend like crazy. I used to work for a Tokyo-based company when I first started. So I used to go to Tokyo about twice a year. And I'm telling you, I saw my my chairman having at the time, a charm off of his cell phone. Seriously, like a Hello Kitty charm. Yep. And I was like, that's weird. That's interesting. I went to Tokyo for the first time. Everywhere.
Everyone had it. Yep.
They gaslight a trend, man. It is unbelievable.
Trends are weird. We had a PPC specialist from PPC Ninja on, and she talked about Japan specifically, and she said the trends that you see in Japan are unbelievable. Well, if you're writing a trend, you will have literally everyone in the country will be purchasing that product. My final question before we hit the top of the hour: why is it important to work with a broker if you want to exit your business?
Well, I'll give you an answer in two parts, but I'll be quick. I would always say that if you are just looking for a very quick transaction and you don't want to go through a very optimized process, by all means, use a traditional business broker. But if you want to use a more, I'd say, sophisticated process to optimize your transaction, you'd want to use an investment banking process. And so I would tell people that, first off, it's just that nothing is new under the sun. Aggregators right now are contacting people left and right. They're getting poached every day.
Direct to sellers.
Listen to me very clearly. There are 60 of them now and growing. We get inquiries of at least two per week.
Yeah, not just the United States, but also internationally too.
Just starting there. Growing everywhere, and oh, by the way, if you want to go work directly with them, you effectively signal to everybody, hi, I'm a commodity business, because your bid isn't going to be any better than anyone else's bid. You're effectively saying I'm steel and corn. That's what you're telling people. And so when you're that, and you believe you're a commodity, well, you're not going to be negotiating from a position of strength when you're going direct to, say, any of the aggregators. So I would say using a process is going to allow you to put your business in front of not just tons and tons of buyers, but you're actually going to put yourself in front of the right buyers that, oh, by the way, they're not looking at these websites of other brokers. They're not subscribers to those email lists. It'll actually give your business a chance to find the right fit and potentially, yes, have a better trade, have a better structure for your deal. So yes, utilizing, and also too, it just goes down to, if you're going to go to court, are you just going to go by yourself and represent yourself?
I hope not, but you can.
Yeah. But if you believe all you need is, let's maybe even kind of use the real estate. I can actually couple it with a real estate example. If you believe you can sell your house by yourself, I don't actually think that's very difficult, right? But when you're talking about something way more complex like court, you need good representation. When you're talking about a complex business and a transaction, a business sale that's more complex, more sizable, more functions within the business, you always want good representation, always. And you want to build out a good team to help you with that transaction.
Yeah, that's good. That's a good place to stop, I think, today. I always tell people, like, know your assets and know your business and make sure that you have people who are going to work on your side, because, again, just like anything, if you don't know all the necessities and all the ways to optimize your business, people do this for a living. And that's why, like, obviously, even if it makes, if it's a couple percentage points that are going to these companies, that's more money that they can potentially give you, though. So again, it's optimizing, making sure you can get your multiples correct, making sure you get your assets correct, and making sure you're not getting, theoretically, leaving money on the table, which is what ping pong payments is all about too. So,
well, I'll leave you with this too. We spoke to somebody who used to work at one of the large funds, aggregator funds, and they point blank told us anyone who came alone did not do nearly as well as someone who came with representation.
Yeah. Time and time again. Yeah. I hear that all the time. It's, again, they're not doing it on your behalf. It's just that, you put numbers on a table, and it's just like business in general. So make sure you as a seller are, understanding there's other options out there. You can just bring people to the table and know, if it's not with one broker and you feel comfortable with another, or they help you out and you go to the table and you still feel comfortable with that, go for it. But again, there's always those what if options, and you don't want to take your biggest asset and leave the rest of your life with what if. So
That's right.
yeah. So Chris, where can people find you, or where can they learn more information if they're like interested or talk to you guys more?
Pretty simple, man. Go to Google, or for 3% of the people using Bing and 1% using Yahoo, type in Global Wired Advisors. I know you also put it in the show notes, and you've got it also in the comment section. So yeah, just come to our website. My email address is there. My phone number is there. You can fill out a consultation form. You can we have a valuation tool. We always tell people it's just really for folks to kind of see at 90,000 feet, because devil's in the details. But we've got a valuation tool. It's just something we've built that we also feed it with real-time information as deals close. So yeah, that's the best way to get in touch with us, is go directly to our website.
Awesome. That's fantastic. And I know you're a busy guy, so we'll make sure that they get in touch with you. Again, in the show notes, we put the website and then also how to connect with Chris on LinkedIn. So that's also super important, just to understand like the content he's putting out there. Message him directly. Chris, it's been fantastic just kind of understanding your guys' business, just talking you through. I know we can go down the dark hole of like talking about other things like Disney anytime. So anytime you want to come back on, or just like think that there's other topics that need to be discussed, let us know. We're going to start doing more roundtable discussions and whatnot in the future. So you know where to find me. But again, loved having you on. Thanks so much for joining us today, and we'll talk to you soon. All right. Thanks. Yep. Thanks again, Chris.
Appreciate it. Thanks, guys.
And then again, everyone who's watching, thank you so much for hopping on Crossover Commerce with me, your host, Ryan Kramer, with Ping Pong Payments. I go live almost every single day, which I continuously say to people. It's important to know because you're always going to get nuggets of information in the Amazon and e-commerce space. Today, we talked about your biggest asset, Amazon, and the assets, and we broke it down to even further, the 4 parts that you can potentially build and grow, and what to look for when potentially exiting your business, working with brokers, working with aggregators, things such as that. But next week, I'm super excited. We're going to be talking about, again, going live. Next week is kind of my most ambitious week to date. I'm going live with 6 different entities. That means 2 times in one day, I'm going to be coming at you live with other nuggets and information. Check out this lineup. We're going to be talking with SellerSnap. They're located. We're going to talk about Amazon's algorithm and winning the buy box with them. We're going to be talking with Frank Acosta and Creative Percent, building brands with that move with Amazon video ads. So we're going to be talking about another really cool opportunity for video ads. Sourcing with Kian Gazari of Sourcing with Kian. He works with the NBA. He's worked with the Olympics. He works and knows the ins and outs of sourcing products internationally. And we're going to be talking product sourcing in 2021. Everything you need to know, what's changed, what's not. It's Chinese New Year that happened, I believe, yesterday. So if you didn't connect with your Chinese supplier, it's going to be a long time before you can get your goods into FBA warehouses or to your own fulfillment locations. Also, we're going to talk with another brokerage, believe it or not, Quiet Light Brokerage, with Joe Valley. Joe is fantastic. I was on his show, and we were just talking through financials in general. He's going to talk about how to reverse engineer a path to an exit. So he's going to take what we talked about today, how to kind of reverse engineer it and kind of help you in that regards. And then on Friday, that's my 2-for-1 day. Friday is typically laid back. I'm in like a sweatpants and, a jacket or something like that. Friday's going to be a lot, but I am super excited. We're going to be talking about the event Women of Amazon with Seller Sessions and Danny McMillan and that organization. But we're going to have on 4 killer Amazon strong women that are just killing it in the Amazon space. And I'm super excited to have an Amazon roundtable focusing on women in the Amazon space. So tune into that in the morning. That's on East Coast time, 10 o'clock Eastern. And then later that afternoon, we're going to be going with Andrew Morgans of Markenology, Building Your Amazon Legacy. He's fantastic, and he's based out of just talking about e-commerce in general, been around in the space. So we're going to be bringing you lots of heavy hitters next week, lots of content, but make sure you join in live and tune in to Crossover Commerce. Again, I'm Ryan Kramer, your host. Go ahead and follow me on social media on Facebook, LinkedIn, and Instagram, but make sure you follow Ping Pong Payments as well on social media, and that's on Facebook, YouTube, LinkedIn, and Twitter. That's where we tell people all about our shows that are coming up for the next week. So stay tuned. Make sure you hit the like and subscribe button. Share this episode with your followers and listeners and your friends if they're looking to exit their business. But I'm here to give you as much information and knowledge from my perspective and the perspective of our guests. So thank you again for joining us live on Crossover Commerce, or if you're listening to us on Apple, Amazon Music, Spotify, or Google Podcasts. We appreciate it. Make sure you like and rate the episode, and then also subscribe to our channels. Have a great weekend, everyone. Be safe out there, and we'll catch you next time on Crossover Commerce.